What is up, traders? Welcome back to another live stream. Hope everybody's doing good. Starting now and giving you guys all a moment to tune in. I have double audio. Okay, so I think the audio is doing good. Let me know how everybody's doing in the stream. If the audio is good, if you guys can hear me clear, if the chart is looking sexy as always. And then I'm going to give everybody a few minutes to tune in because we're going to go back on a big rant in today's live session, guys. This is going to be another live stream where we're going to go over all of the movements within the markets, identify potential trade opportunities, and as always, we're going to get that money. So guys, welcome back. How's everybody doing? Where are you tuning in from in the world today? Let me know in the chat. I want to know where everybody is tuning in from, guys. Obviously myself, as always, here in Amsterdam, but looking forward to hop on this stream with you all today. I'm gonna just drop the link to this stream inside Discord, and then we're gonna kick it all off. We're going to kick it all off as always. Guys, how is everybody doing? I see Croatia even in the building today. Fantastic. Benjamin, welcome to the stream. India, Sri Lanka, UK, we have Zeeland in the Netherlands, United States, South Africa, Sweden, Nigeria, London, Australia, Melbourne, Portugal, Mars, obviously Mars, India, GP Cell View. Great, guys. Uganda in the building as well. Zambia, South Africa. A lot of people from South Africa, guys. Poland. Fantastic. Even Poland. And Germany. France, Finland, Pakistan. Crazy, man. Always a pleasure to have you all in here on stream. Yeah, super happy to have you all here. We're going to dive into the stream as always. And yeah, let's see what has been going on. Because today we're going to be active here again, guys. I have good energy. So if you guys give me the same energy in the chat, you can expect me to be extremely active here on the stream throughout the entirety of this, let's say, New York session open. And I'll be sharing my my insights, what I've been seeing and what I've been trading myself and what I'm looking to trade. Because I do see that the market is starting to provide us with more and more potential trade opportunities. So first of all, we need to talk about where the money has been made and where you could have made money this week so far. So if you paid attention to yesterday, guys, then you should have seen that on EURUSD there was a potential trade opportunity to take. So first of all, guys, what has been going on with EURUSD? It's obviously been in a very heavy area of consolidation. Now, throughout the entirety of the week and last week, we've been calling that this supply zone could potentially push the market down lower. Now, myself, not really been too big of a fan of EURUSD. However, yesterday there was an opportunity to make some money, and that was mainly in correspondence with the dollar index. So as you know, the dollar index itself here on the monthly time frame has been trading within this overall uptrend, right? So we had a first tap, we had a second tap, and now we've had that third trend line tap. So the overall uptrend is extremely clear on the monthly time frame, and therefore it is logical to potentially say that the dollar could start heading up at any point in time, mainly also from the perspective that we are currently trading at a discount, right? So we're looking for those longs in towards the upside. Now, where do longs always take place from? They take place from an area of liquidity. So here we have equal lows. So we have liquidity. They take place from an area of discount. So we have discount. And they take place from an area of demand. So we have demand in the form of those imbalances. Now, what do you then need in order to look for that overall upside continuation? We need the bullish confirmation. So where does the bullish confirmation then come from? It comes from the overall fractal structure break indicator, guys. That is the overall confirmation that we need in order to understand that that market is actually ready to start heading up higher. So on the weekly time frame here on the dollar index, we can clearly see here that we got the fractal breakup. That then means here that the sell before the big buy up that broke that fractal, that is then your area of demand. So inside of that weekly area of demand, that is then where we were looking for a potential long opportunity. Now here on the daily time time frame, you can see we've been extremely slow. However, within the daily time frame, we obviously made that first tap into this daily imbalance, and then if you go to the 4-hour time frame, you can clearly see that that is a sell down before an even bigger buy in towards the highs. Now, throughout the entirety of the week, and I know the chart looks a little bit messy, guys, but it's extremely simple to understand, we were building up a lot of liquidity underneath all of these ascending lows. Now, what happens with the overall news push after taking out these two descending highs? What happens? Boom, massive sell-off in towards the downside. Then what happens? EURUSD starts to push down lower. Why? Because the dollar starts to push up higher from an area of daily demand, and then obviously we discussed the overall higher time from confluence, but as well we swept here some liquidity. Now, after liquidity swipe, what can you expect? You can expect a potential reversal up higher together with the overall higher time from narrative. Now go to EURUSD, and now we're going to dive into the potential trade that you could have taken this week. What do we see here on the 4-hour time frame? First of all, we see that the market in itself is consolidating. Okay, so we're moving sideways. Now, a sideways moving market is a market that personally I'm not the biggest fan to trade. However, there's one thing different with this EURUSD trade that some of you took. Okay, so myself, I didn't trade this because I personally was being sidelined, as in the previous week I already made my money for this month, right? It's the last week of August. I'm not going to be wasting my hard-earned capital on some range trade. However, a lot of you were able to capitalize. So again, what do we do? And this is just purely looking at this from a 4-hour perspective. I'm going to make the chart all clean so that you guys exactly understand how to take this trade with me. Okay, so I'm going to run you guys through it one step at a time. So first of all, what we have here is a break of structure in towards the upside. Okay, so at this point in time, it's very clear to me that the overall 4-hour was bullish in towards the highs. However, what happens is that the market here failed after making a retracement and taking out these ascending lows here, liquidating that. It failed to put in a new higher high. So bullish momentum was weakening overall. Then what happens? We break the overall swing low on the 4-hour, because look, this here was your overall swing structure, right? So again, here we had ascending lows, we're inside discount, so it makes sense to look for this potential long up higher. However, then what happens? We see an overall 4-hour break in market structure in towards the downside. What does that then mean? It means that this here is swing high on the 4-hour time frame, this overall bullish high here, and this here is our overall swing low. So this then becomes your overall impulse in towards the downside, right? So if we look at this from a market structure perspective, we can then very clearly see here that we have a swing high, we have a swing low, and we're looking for an overall potential shorting opportunity again in towards the downside. Now that is the overall market structure here explained on the 4-hour time frame. Okay, so what you're then going to be looking for as other confluences, because we always use 4 confluences, and confluence point number 1 was the one I just explained, the overall market structure. Now we dive into confluence point number 2. That is the overall premium versus discount, where we have here the fib drawn in from the swing high in towards the swing low. The rule of thumb is you go long at a discount, you go short at a premium. Very simply said, right? So for example, if you view this as liquidity lows, we take out the liquidity lows, and what can you potentially expect? You can expect a reversal. Where does a reversal happen? Here, after the 4-hour change of character took place, right? So you never came back into that demand zone, but let's say you place the overall buy stop. Obviously this is with NFP, but theoretically speaking, you could have taken this overall buy stop back in towards the highs after grabbing liquidity and after seeing that 4-hour change of character, and because you're trading at a discount. But in this particular example that I'm trying to explain to you guys, we're obviously trading here with confluence point number 2 at a premium. So the overall short in towards the downside makes sense from a premium versus discount perspective, right? So now you want to look for that short. What are the other confluences that we can use? Well, we can use obviously supply and demand. That is confluence point number 3. So what we look at here is confluence point number 3. Again, what do? We look at the buy before the sell. Now here we have a extremely clear buy up for a stronger sell down, and that is positioned inside premium, and which is in line with the overall bearish market structure, which is this overall impulse in towards the downside. Now obviously, what have we seen? We've seen an impulsive phase in towards downside. Let's make this overall red just to make it very clear that this is the bearish phase. Then what do we have? We have the overall pullback phase here in towards the highs. When is the pullback then over? The pullback is over once 1, we come into supply, 2, we form or we build liquidity, and then number 3, when we get the overall confirmation that it's ready to push down lower in the form of the market structure shift whatsoever. Now, in this particular example, what do we see? We see that the market comes with the ascending structure in towards the overall supply zone, right? So what do we have? And I talk about this so many times, guys. We have a one drive, a second drive, and then a third drive. So always look for this. A lot of people would call this Elliott wave, where we have a 1, 2, 3, 4, 5, and then you're looking for something called like an A, B, and then a C in towards the downside. Personally, I think that's just overcomplicating. What I personally love doing is just looking for the one drive, the second drive, and then the third drive. And once the third drive has taken place, I just look for the overall deeper correction. A perfect picture example, or picture perfect example of this took place on NZD-JPY, and one of you guys had an amazing trade breakdown on this. Again, with the overall ascending wedge here taking place, where again you see a one drive, a second drive, and then a third drive. And then what happens here after the 4-hour change of character in towards the downside, the overall sell-off happened. Now here, if you were to use this as supply, then obviously market never retraces into supply, but that's obviously why you can use those sell stops after the 4-hour fractal takes place, and once you actually grab enough liquidity in towards a new lower low. So that again is just showing you guys, yes Sarim, it's you, that's showing you guys the power of that overall ascending structure. And then again here it happens on EURUSD with the 1, the 2, the 3. So that is then when we're looking for that overall shorting opportunity. Okay, so obviously what then happens with EURUSD is it does start pushing in towards the downside, but no real follow through. Why? Because of the news, right? So it starts to consolidate. There was some actual follow through in towards the downside, but then what happens after grabbing these two ascending lows, the market then reverses in towards the upside. Now, regardless of the overall outcome of this trade, there was still a trade to be taken within that overall supply zone, within that overall 4-hour bearish market swing structure, within premium, because what happened here is you have the 1, you have the 2, you have the 3. Then if you zoom into this piece of price action here on EURUSD, what then happens is that you form a very, very nice area of imbalance on these two candlesticks over here. You extend that zone to the right, and that is then your area of supply. Now go to the lower time frame, and what you will see is that overall wick, right? So that overall wick on the 4-hour time frame that we had over here, that is then going to be liquidity on the lower time frame. So if you look at this piece of price action here, a lot of traders would shit their pants because they don't dare to go long from this, or they go long from this in towards the upside, expecting that the overall market structure will continue in towards the highs. But what you need to understand is that the overall swing structure is much more important, right? The overall swing from this high in towards this low, that is bearish. And then next to that, we've had the overall completion of this 1, 2, 3 in towards the highs. So at that point in time, we're looking for an overall short position. So when does the actual short position then have the potential to play out? Here, what do we get? We get the 4-hour change of character in towards the downside. We tapped into higher time frame supply. We had the 1, 2, 3. We're trading at a premium. We get again that change of character in towards the downside. So the last thing that you're kind of looking for confirmation for your overall setup is the liquidity. Now, again, this 4-hour wick here in towards the highs, that is then going to be your liquidity, because if you look at the 1-hour time frame, what you're going to be able to see here is that you get the push down. And what is this, guys? This is what I always love calling it is a bump in the fucking road that we want to get taken out. We want to have a bumpy ride on the way down, because smooth sailing is never a good thing. We always need those bumps in the road, because those are going to kind of like make the car go like boom, 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 and then at a certain point it just flies to the fucking moon, or it sinks to the bottom of the bloody sea, right? I know, maybe not the best explanation, but I think you guys kind of understand what I mean. So we use this as a little bump in the road to fuel the overall price to then sell off in towards the downside. So then what happens, let's say, okay, you enter this just with a sell stop, or with a sell limit, excuse me, and you enter this, then what happens, the price comes up in towards that, and then from there, the overall reversal back in towards the downside takes place. Now, obviously, if you want more confirmation and you don't have the balls to place a sell limit, which is perfectly fine, because I wouldn't have had that back in the days if there was not somebody like me explaining this. What you can then do, obviously, is wait for price to come in towards that overall supply zone to grab that liquidity, and then you just simply wait for the overall change of character to take place, right? So here we have a sweep of this overall high. Then what is this? This is then the change of character low. Change of character low gets broken. That then means that this buy before the sell is your supply zone, and that is then the area that you have as the 1-hour confirmation to then sell in towards downside, and that is how you could have hit the overall 1 to 3 risk to reward. So that is how you can play these kind of setups, guys, on EURUSD, trading in line with the overall market structure of the 4-hour swing within premium, within the overall price pattern with the 1, 2, 3 in towards the downside, right? So that is obviously then setup number one. However, guys, if you're then still looking for a short position in towards the downside, what do? We focus on what's happening here. So at some point in time, you see this happen, okay? So you see that the market is now evolving into some kind of like market structure where we're seeing, let's say, the market range. So what you always want to do when the market is ranging is two things, okay? You want to first of all mark out the swing low, and you want to mark out the swing high. So in this particular example, we have the swing low positioned over here. We have the swing high positioned over here. And what we are simply going to wait for is always wait for the low of the range to get swiped or for the high of the range to get swiped. And I've talked about this so many times because what you want to see happening is price come in towards there and then give you the change of character to then confirm that the market wants to head up in the other direction, or you want it to obviously swipe the overall high of the range, and then you want to get the change of character to then trade back in towards the downside. And in the last stream, if you were there, I talked about this for hours, guys. Well, not hours, for like 45 minutes non-stop. But it is, again, the same concept, and it works on every single time frame. You mark out the overall swing high, you mark out the overall swing low, and then you wait for the overall confirmation. If you confirm this then with the overall market structure, with premium versus discount, supply and demand, you have a killer strategy. So again, what you can then do, guys, on the overall Monday, because look, this is what happened on Friday, right? So here, what happens, okay, we take the overall swing low here, and what then happens here is that we get the overall change of character in towards the upside. So again, like I just explained at the beginning of the stream, what you could have done here is place the overall buy stop on top of that high break, stop loss underneath, and then you would have had the 1, 2, 3. Again, obviously you're trading news, but just to give you guys an idea, because in a back test, you could also take these kind of trades, right? Now, what happens here on EURUSD? You come back in towards the high of the range. Obviously, nothing has changed from a 4-hour swing perspective. And this is one of the trades that Louis took, guys. And he explained this inside Discord as well in his update channel. Is that you wait again for the overall market high here to get taken, to get swept. There's no close above this line. It's just purely a liquidity grab. Shift down towards the 1 hour. And what you see happening here is, again, perfection. And I explained this in my overall video on YouTube. I think it was around 2 weeks ago on liquidity, that we have here what? We have two forms of liquidity on this chart. Do you guys know what these two forms of liquidity are? Let me know in the chat, because this is such a clear example of liquidity, guys. We have two forms. They're both here drawn out on my chart, and I want you guys to understand what those two forms of liquidity are so that you can use them in the future to your own advantage, because these are so important to understand. So number one, indeed, we have range liquidity. So obviously we're already trading within a range. Above the range we have liquidity, underneath the range we have liquidity, and these cause for reversals. Now the second form of liquidity is going to be trend line liquidity. So indeed we have the overall descending trend line in towards the downside, and what we want to then see happening is the market take out all of that trend line liquidity. So what I just simply do is I just use the very first high of the overall descending trend line in towards the downside as my liquidity high, and once that gets taken out, that is then the overall area from where I'm happy to look for a potential short from. Okay, so again, this just adds to the overall confluence that there is a lot of supply within the market over here to then short in towards the downside, because everybody obviously has FOMO on this overall massive candle in towards the upside. Now, how you can then trade the overall reversal in towards the downside is once all of the liquidity above that overall descending trend line gets taken out. Two, we grab the liquidity above the overall range, because again, when in doubt, zoom out. So we go to the 4-hour time frame. We can clearly see here that the overall high of the range gets taken. And again, nothing has changed from the overall higher time frame picture being the overall 4-hour swing structure, right? So we have still gotten the overall 4-hour swing structure that is bearish. We are still trading at a premium, and we still had that overall pattern play out. Now, what has happened is just simply said, the market has just come back all the way in towards the highs to take out the high and then just potentially fuel the next leg down. Now, I'm just talking about the overall current setup that you could have taken, right, guys? So what you then do here, after all of the liquidity gets grabbed, you go in towards the 1-hour time frame. Now, on the 1-hour time frame, you wait for the overall market structure shift to happen. So the market structure shift here happens in the form of a change of character on the 1 hour. So what we see here, and again, I'm just going to change my overall color of this pen so that's a little bit more clear. Here we see the high break. Here we then have the overall fractal low. So what then happens? Again, I'm not going to be too aggressive because this overall fractal low break took place during the Asian session at 1 o'clock. So what happens? We get the overall push in towards the downside. That then means here that the buy for the sell here is going to be your overall area of interest from where we can look for the potential sells in towards the downside. And then what happens? The market retraces back in towards that area of supply, and then from there overall the real sell-off mirroring the overall news push in towards the highs then happens in towards the downside for a beautiful 1 to 3 risk to reward. And that is this week how you could have traded EURUSD to your advantage. And in addition to that, how you could, let's say, I'm not saying you should have, but how you could have traded the overall impulse in towards the highs, and how you could also have taken that initial short position that I highlighted over here. So in itself, this is already free R, free R, free R. Now let's just fade away that news trade. Then you would have already been up 6R here just in the past 2 weeks, purely trading EURUSD. So now, obviously, what has happened on EURUSD? The market has now come into where? So if we go on the 4-hour time frame, what has happened? Or on the daily time frame, what has happened? Guys, EURUSD is consolidating like hell, okay? This shit is like literally the backside of any package that you buy at the supermarket. Probably if you scan this overall chart here, what you're going to see is you're going to hear bleep bleep. Like bring this literally to a supermarket, scan the thing, test it. Maybe somebody in the community can test it and film it. You're probably going to hear bleep bleep, bleep bleep. Okay, error. AI has error. You're going to hear bleep bleep on this overall piece of QR code. Because this is just, literally, range price action. So we just need to watch out overall with what is going on here. Now, obviously, what's happened is that the market is now reversed in towards the downside of this overall sell before the buy, right? So this sell down before the big buy up, that is now your area of demand. Market has tapped into that demand zone. Now, what we can clearly see here on the 1-hour time frame is kind of like the equal lows. So the initial reaction to that overall demand zone, that gets liquidated. Because again, guys, you know it as well. Why do we not want to go long from this area of demand? Everybody here in the chat knows why, guys. You do not want to go long from this area of demand, guys. You don't know, you literally don't want to go long from this area of demand. Yeah. Okay, guys, somebody needs to go to the supermarket and scan that QR code. Okay, water break, guys. Okay, we can continue. So now, obviously, we never want to buy on the very first area of demand with this bullish candlestick over here, or for example, this bullish candlestick over here obviously gives a lot of FOMO. People place a stop loss on the overall low, and then what happens? Boom, thing reverses into your stop loss. You get nuked, you cry, and you die. As simple as that. And then you contemplate your life and you think, should I stop trading? Well, guys, always stick to trading, because trading is the best thing in the world, guys. Going back into EURUSD in itself, then what happens? We liquidate the overall low, and that is why the market is now pushing back in towards the highs. Now, again, a lot of people getting long on this overall bullish momentum. What is EURUSD going to do next? Personally, guys, I simply don't know. For myself, the market is just too consolidative to really trade EURUSD at the moment. I personally think that there's better opportunities elsewhere. Looking here at EURUSD, for me, what has happened is that we've just swept the overall high, taken that liquidity, and we've swept the overall low, we've taken that liquidity, and now the market is just stuck back at the 0.5 fib. Because if you were to draw in a fib tool here on the swing high and the swing low, you can see again we get a perfect tap into the 0.5 fib and the market is stalling. That is literally how perfect the 0.5 fib actually is, guys. And yeah, you should just use the 0.5 fib. The 0.5 fib is like that guy who gets all the girls in class, you know, like somehow he just always gets kissed. Here he gets a kiss, here he gets a little kiss, and somehow you're always jealous of him and you don't use him because somehow you just think, the 618 is more sexy, but the 618 is just never going to fall in love with you. So you always have to stick with the 0.5, guys. That is kind of like the moral of the overall story, if that makes sense. So that is kind of like some life advice also on why you should always go for 0.5 and not for 618. Then next to that, where are the opportunities then, guys? Where are the opportunities? Personally, on Forex, I'm seeing opportunities on the yen pairs, and I'm seeing opportunities here on German 40 on indices, okay? We have Adam Fiki spamming gold in the chat. Again, Adam has been banned, and yeah, no more talking. 0.5 is Rutger. Yes, Raphael, 0.5 is Rutger. Okay, guys, now let's have a look at German 40, okay? So first of all, German 40, why am I potentially looking at trading this thing, okay? So first of all, what I'm actually looking at this for potentially is potential longs in towards the highs, okay? So what has taken place here, just again, from a market structure perspective, because you guys know every single time we break down a chart, we do it in the exact same way, okay? So again, like you guys can do it as well. Like these are literally kind of like, again, if we're talking about like, nah, I'm not going to talk about that. Let's just focus on the charts. So the daily, I was going to say something, but I'm not going to say it. So again, swing structures from this low in towards this high. All right, that's all you kind of like need to know. Then again, that is market structure explained. Market structure bullish. Then we draw in the premium versus discount tool from the swing low in towards the swing high. Has the retracement in towards discount price been made? So everything below the 0.5 fib, check. Yes, has happened. Okay, so now what has happened? We see the overall V-shaped reversal in towards the highs, taking out all of this liquidity of descending lows, and therefore we can potentially expect that the market is ready to push and continue in towards the highs. Okay, so here we had the impulsive phase in towards the highs. I'll make the impulsive phase nice and green. Then what do we have? We have the pullback phase in towards the downside, which will make orange. And now where are we trading at? We're trading again in the impulsive phase. So what are we expecting? We're expecting a new higher high to be made, because that is literally 101 of trading, right? Impulse up, retracement, impulse up. However, how it actually happens is like this, and then like this, and then like this, and then like this, right? So somehow it's still hard to understand, but if you kind of like zoom out and you don't really focus too much on the individual candlesticks, you really understand how the market actually moves. So we're currently in an impulsive phase, therefore we are looking for a potential long opportunity in towards the highs. We've already made a retracement in towards the downside into discount, and we've already grabbed liquidity underneath all of the ascending lows. So we're looking for the overall continuation in towards the highs to take place. Now, again, what do we need in order to look for longs? The second form of market structure, which is fractal structure. So again, looking at the fractal structure here, we can see that we are bullish in between the current fractal low and the current fractal high. Look at the overall sell before the buy. That is going to be your overall demand zone. That is the easiest way to identify a demand zone. Again, it doesn't need to be complicated. You don't need to tell a whole life story to identify it. You don't need to look at where the moon is. You don't need to look at the star signs, blah, 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 blah. It's 1 + 1 is 2. Sell before the buy is the demand zone. As simple as that. So we understand that this overall sell before the buy up is our overall demand zone. So inside of that, we're looking for potential long. Again, you can draw in your Fibonacci retracement tool here, and what you will see is that the market has retraced into discount pricing. Again, initially the 0.5 fib, again, very, very beautiful, already started pushing the market in towards the highs. However, he didn't have enough game, so she left him and she went for 618. So guys, congratulations if you're a 618. Today is your day. Now, again, we've retraced all the way back down in towards those lows. So now we go to the 4-hour time frame to identify potential refined area of demand. Because again, taking the entire sell for the buy sometimes is going to be a little bit complicated, or is going to make your life a little bit more complicated. So what do? We wait for the overall lows to get swept. So here, what we had was little liquidity low. Now we've taken out both of these lows. Okay, so those lows have been swept, and now I'm looking for the overall continuation play in towards the high here on German 40. Okay, so we swipe the lows. What happens? We retrace into this imbalance candle over here, which is the end boss of demand zones. Again, this is the steal your girl guy, because again, you are trying to long here, and then you think, aha, I'm gonna bring her home. You already think about how you're gonna get married, have kids, blah 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 blah. Here, this is literally house, wife, kids, dog. And then here you're kind of like locked in. You make her all warm, and then she just leaves you and goes for the other guy. Like, that is how you can kind of like explain it on German 40 here, where again, we see a further push in towards the downside, and then we grab the overall ascending lows here, take out this, and then what happens here, we get the 4-hour change of character. Because what happens, push down, pull back, push down, boom, push in towards the highs. And then this is now the overall balance that should keep pushing the market in towards the highs. Now, this is what needs to happen next, guys. We need to see that push in towards the highs. So I think this is a good trade opportunity for the upcoming days. Let's keep an eye on it. It is very consolidative at the moment, but I do see opportunity to make a shit ton of money here on German 40. Okay, who is with me, guys? Let me know in the chat. What do you guys think of German 40? Bro, trading, yeah, the toxic X strategy always hits, bro. He always hits. What do we think of German 40 potential longs, guys? I also like this liquidation wick that took place this morning on London Open. So let's see. Let's see, guys. What do we think? What do we think of those German 40 potential longs? Everything is possible. Fantastic answer. Thank you, Sean. Means the world, brother. It's looking good. Can't lie. Yes, guys. Okay. Great explanation. What if we just want a girlfriend, not a wife, or just a dog? Then you just take 1 R trades, bro, instead of those 3 R trades. Okay, guys. Well, then that means if everybody agrees, I think this is a good trade to trade this back up in towards the overall highs, man. Just a simple 1 to 2. You can kind of see it corresponds with that. Or maybe put some entry kind of like underneath the lows. You can kind of like refine it a little bit. I think this has good potential for further upside. So that's kind of like the long that I'm looking here for on German 40. A different opportunity that we've obviously been looking at are those yen pairs with the potential yen longs. I know a lot of you are looking at Aussie yen, CAD yen, GJ for further downside. Guys, we'll also look at GBPUSD in a second. Just want to quickly discuss GJ, Aussie yen, CAD yen. For myself, GJ in itself has the potential to head down lower. For now, it's still a very consolidated market, but does look good for a potential drop. I always like pairs that kind of like take out these fake areas of supply to then give a real push in towards the downside. So definitely keeping an eye on that. Why you do not trade the 1 minute time frame? Yeah, very simply said, I have a life. So yeah, that's why. Simple. Then if we look at CAD yen, let's have a look. CAD yen in itself has been following market structure pretty nicely. Overall, you can see here that we took out a nice swing high that was positioned over here. After taking out that overall swing high, initial sellers came into the markets, but we never really saw a change of character. So again, guys, what do we need in order to trade the overall reversal in towards the downside? And oof, this is a picture perfect example. I love this stuff, guys, because here it is so clear. Again, what happens? Okay, you identify this overall swing high. Okay, so I think everybody here in the chat also understands that this is a potential swing high from where you would want to be looking for a reversal for. Let's say you think this is the overextended move in towards the highs and it's time for a reversal in towards the downside. Then you identify this here as a swing high, you identify this here as a swing high, and you identify this here as a swing high. And you are telling yourself, I want to see a reversal from one of the three zones happen, okay? Now, price comes into your overall zone here. You get this bearish daily candlestick, and what happens? You start thinking, oof, Fabio, it is time to sell the hell out of CAD yen. I see the 4-hour fractal structure shifting towards the downside. This is going to be my moment where I'm finally going to make a lot of money. You click on play, you enter the trade, you see some initial downside happening, and then what happens? The market reverses in towards the highs, and you get effed. That is what happens at the end of the day. The market never hit that 1 to 2 risk reward. So what actually happened, guys, if we zoom in to what actually happened here on the trade, is that after sweeping the overall high here, the overall swing high, right, what happened is that the market never gave the confirmation in the form of the daily. So what actually happened here is that the market was just following fractal structure in towards the highs. We retrace into the overall sell down for the buy up, and here you can already kind of see it if you guys have a little eye for detail, and I hope that the overall image is sharp enough for you guys, that here we have the overall low gets swiped, and then you see kind of like the overall continuation in towards the highs. That was kind of like a very nice example of liquidation. Now, the actual real move when then price is ready to potentially sell off after it swept the overall high, and grabbing that liquidity is then obviously when the change of character happens. So when does the change of character happen? The change of character happens over here on the overall buy before the sell. This is then the overall supply that is in control. And from there, you have much higher probability moves in towards the downside, okay? So again, go here to the 4-hour time frame, and what do we see? We see a nice overall ascending correction in towards the highs take place. Obviously, again, for anybody watching this, you never sell from this area of supply over here. Never, ever, 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 ever sell from that supply zone. Otherwise, I'm going to get very pissed, guys, because this is 101 of supply and demand trading. You always wait for the bloody bump in the road to get taken out, because we always want the biggest jump in towards RTP. We always need to take out the internal highs, okay, before looking for the real sell-off in towards the downside. So what happens here, we take out the overall internal high. From there, you kind of see again a 1 drive, a 2nd drive, a 3rd drive. Then what happens here, you have the real supply zone, and then from there you want to be looking for the potential shorts, and especially this high over here with the overall 4-hour fractal in towards the downside. That was a very, very nice overall setup to take for you guys. So make sure to study that one there on CAD yen. But yeah, overall looking for some downside continuation there on CAD yen, Aussie yen as well. I do think that those pairs have potential. We just need to see a little bit more confirmation start to form. Obviously here you've seen a 4-hour fractal break in towards the downside, but it's just simply set with a wick. Here what happened on the daily is that we tapped into this daily area of supply, and obviously we're now looking for an overall downside push. We're currently inside that daily supply zone. 4-hour has given us a change of character, but it's more just a liquidity grab in towards the downside. So again, this is just kind of like potential fuel to head up higher. I would really want to see at least a candle close. We have descending highs here as well, so I wouldn't be surprised if we maybe move up higher towards this black line here, and then the real sell-off in towards the downside occurs. So keep that in mind. Now guys, we're going to dive into GBPUSD because everybody's spamming the chat with it. Now you guys know what I've been looking for on GBPUSD, and to be very honest, it's pretty simple. I'm just looking for further downside. Now, I must say the overall setup on GU was more clear at the beginning of the week than it is now, or let me put it this way, last week. Overall, daily time frame, or let's start on the weekly. So from a weekly time frame perspective, obviously what we've seen is over here, the break of structure in towards the upside. Then after the break of structure happens, what do we see? We see price continues to push in towards where? Again, an overall liquidity high that was positioned over here, okay? So what do we expect after break of structure? We expect a pullback to take place. When do we expect a pullback to take place? Once liquidity gets grabbed and when we're trading at a premium. And you want the pullback pretty much at least to take place in towards that 0.5 fib, right? That's kind of like what we want to see. So we're trading inside a premium and we're looking to sell in towards 0.5 fib. I go down to the daily time frame, and what do I identify there? Again, a perfect 1, 2, 3. So here we have the 1, here we have the 2, here we have the 3 in towards the highs. Then we get the daily change of character down, and then eventually what happens here is that again, so market structure break, and then here in towards the downside, a market structure break, meaning swing high, swing low. So what do we have here? We have again the Fibonacci, right? So confluence point number 2, because confluence point number 1 was the market structure, which I just discussed. Confluence point number 2 is the overall, again, PVD. So we're trading above the 0.5 fib here, right? So over here, 0.5 fib. Then number 3, we need liquidity. Well, we took out, again, as always mentioned, and I mentioned it just in the last example as well, we need to take out the bump in the road. So here we take out the bump in the road. So obviously the overall sell-off in towards downside then has more potential to start playing out. So that is pretty much what we need in order to look for the overall sell. Here we also have an old area of demand on these imbalance candles. So again, enough confluence to look for the overall short position in towards the downside. We go into towards the 4-hour time frame, and what do we see on the 4-hour time frame? We see trendline liquidity got grabbed, excuse me. So here we had trendline liquidity in towards the downside, and what price has now done is it's retraced in towards this refined area of supply here. So this imbalance candle over here, that is where the market retraced into. It came to the beginning of the overall descending trend line here, which is this high. So what happens is we take out liquidity, we tap into supply, and now some order flow has started to form in towards the low. So yes, guys, I agree with you. GBPUSD is good to look for potential sell. What has happened again is that we've taken out this little bump in the road here, and I'm now also looking for some downside continuation on GBPUSD to take out this overall news low, okay? So let's see that happen, and let's see GBPUSD sell off in towards the downside, and let's all make money together and have a happy life. The end. So that's what I'm looking for on GBPUSD, guys. That would be amazing. In the meantime, quick check in with German 40. Still slow, not a lot of volume on that. What else? Gold for you guys. Gold has been consolidating and chopping around. Obviously, overall order flow has been bullish, but it's not the cleanest of price action overall. Not a massive fan. We've also kind of like come back up into this overall supply or imbalance candle over here. I didn't actually highlight this one this morning on the YouTube video, but just keep an eye on that because that could potentially cause a reversal as well. For me, gold is really trading in an unclear area. It's kind of like in between demand here and supply here. Price is also squeezing, as I like to call it. It's squeezing and it's becoming smaller and smaller. So there's going to be a big breakout soon. Either we pump into the all-time highs or we see some kind of massive flush out. I wouldn't be surprised with one of the two because, yeah, price is just squeezing so hard now. And at some point in time, it should pop. But yeah, I'm not going to try and get screwed on that. NASDAQ could be along in the near future. I think overall, we've made a nice and decent sizable retracement. The only thing I don't like about NASDAQ is that it left behind these ascending lows. So keep an eye on that. This is not the strongest low to look for longs from. So yeah, personally, I would like for us to see one more drop off in towards the downside. I'm not saying that it's going to happen. Obviously, we're kind of like within the sub for the buy up. but this is not an area that I would like to trade. I don't have high convictions for shorts, but also not for longs. People who are looking to trade GJ looks good for potential shorting opportunity. USD JPY is obviously trading in a big ass range, guys. Don't get screwed by this. The low of the range is still open, so I would prefer for this to sell off in towards the downside. Not saying it's going to happen, but obviously we've swept the high of the range, and now I would like to sweep the overall low of the range. So yeah, I would prefer a sell-off, but for me it's just trading within this area of consolidation. Same goes for USD Swiss. A lot of people asking me about USD Swiss, but USD Swiss is one of those pairs. It's like, man, it's your stepmother. You just never really want to meet her. So yeah, I guess that's USD Swiss. For the rest, GBPUSD, yeah, potential shorts, EURUSD, messy for now. So I think the main opportunities lie there on GU for those potential shorts to take place. And then obviously German 40 that also has the potential to take on longs. Euro yen started selling off. That was pretty clear in towards the downside. I know a lot of traders were still in those Euro yen shorts from a while ago. I can see it's kind of like stalling again because Euro yen in itself is pretty much inside that daily fractal supply zone over here, the overall buy before the sell. Within that, I know a lot of you identified some good shorts. So again, what happened here is that we kind of like took out this little bump in the road here. After that, a lot of traders took a short from this area of supply on the fractal low break with stops above this high. Overall, Euro yen has been consolidating and it is very consolidative. So I'll probably be sticking this one out if I were you, and I would be looking at the overall range high and low. So for now, it's similar to like what EURUSD once was, where we have the low of the range and we have the high of the range, and price is stuck inside of that. So what you want to see is price to come to the high of the range from where we can look for a short, or it needs to come to the low of the range from where we can look for a long. But currently price is stuck inside of there. Euro GBP has the potential to look for longs in the very near future. I think this has some potential to push up higher. It's come back in towards the downside to swipe this low, if I'm not mistaken. Yes, so it swept that overall low, and now it makes sense again to look for another drive up. What I want you guys to identify again here on Euro GBP is something that I've recognized so many times, and again we're discussing it the entire stream. What do we again see? We see the first drive, the second drive, the third drive. Again, perfect ascending structure, which then again results in an overall sell-off. After the initial sell here gets liquidated, the real sell-off in towards the downside happens. Again, so clear. Guys, that is pretty much it for today. You know what I'm looking for: GU shorts and DAX or German 40 shorts. Those are or German 40 longs. Those are the main trades that I have on my radar. I want to thank you all for being here. I wish you all an amazing day. I hope you guys enjoyed being here on stream with myself, and you enjoy me doing the streams in this kind of format. If you have any suggestions, ideas, whatever, let me know. Appreciate it that you guys are always here. Make sure to join the Discord. Link is in the description of this video. We had an event with the best trade breakdown. You can still vote, so make sure to head into Discord and vote for your favorite trade breakdown. There's going to be another event going live today, which is going to be the second giveaway of the week as well. So make sure to check out Discord, as again, there's going to be another giveaway happening. So yeah, that's it pretty much. Looking for yen longs, looking for DAX longs, and looking for GU potential shorts. Guys, thank you. Appreciate you all. Wish you all a fantastic day, and ciao.